Good morning and welcome to Market Monday for April 28th, 2025. Last week was the 5th anniversary of, remember this? April of 2020, crude oil, which has been bouncing around in the low 60s recently, went below zero and actually all the way down to negative $37 per barrel. It would seem that that would have been one of the most extreme market environments, and it was until now. Indeed, we just completed the 9th consecutive week with AAII, American Association of Individual Investors, bears who think the market will go down over 50% for 9 weeks in a row. And back during COVID, when oil went to negative $37 per barrel, we only got 3 weeks and 2 weeks. 2022, pretty bad for stocks and bonds, got to 5 weeks. Global financial crisis had some 4-week streaks in there, but nothing close to the 9 weeks. .com crash was barely even a blip. So now, because the tariff tantrum, a streak of bearishness that puts all others to shame, who's not bearish? Well, insiders, corporate insiders that is. Up here is the S&P 500 stock market in gray. And down here is the insider buying and selling. These are the folks who have the best knowledge about the strength of their businesses and profits and outlook, etc. When this line is going down, corporate insiders are buying. What happened? March 2009, stock market low, insiders buying. December 2018, after a 20% sell-off in the fourth quarter, insiders buying again. COVID, buying. September 2022, 1 month before the bottom of the bear market, well, buying. And now again in April of 2025, insiders are buying. As it stands, it has been a rough start to the year. After the first 74 days, the third worst. And of the top 5 starts to the year, it does appear the rest of the year, so essentially from today until the end of the year, has been positive, and substantially so. Just history and context. And for all the talk about the ups and downs of the market, performance over this time frame, or what the market's done when this or that happens, another feature of stock ownership are the dividends. Dividends are a feature of stock ownership, not necessarily an advantage or disadvantage, and should be structured according to your goals. But here's one thing that dividends tend to do: go up. Here are the actual dividends of the S&P 500 stock market since 1998, starting at $9.75 per share and going all the way up to $76.14 per share. This is money you can either take as cash or reinvest according to your goals. But you're entitled to these dividends simply by holding the shares. One thing we want to point out, while over time dividends clearly have increased substantially, dividends are not guaranteed, like a bond payment, for example. And dividends can also go down during time of the market stress. .com here, global financial crisis here, and a little blip during COVID up here. But the fact remains, dividends are an important part of the stock market's total return. And today, we'll leave you with, there are now 72 crypto-related ETFs sitting with the SEC awaiting approval. We've got a couple indexes or baskets, Litecoin, Solana, Doge, XRP, Trump coin, 2-time Melania coin. It's gonna be a wild year. Have a great week.